Good morning. My name is Ryan Littlestone from forexflow.live. This morning we're going to talk about dollar yen and a couple of factors that are playing in the market at the moment. What we've got is the FOMC coming up this week, and we're going to take a look at the volatility levels, which is affecting this pair at the moment. So we'll start with the volatility side of things, and what we've really seen is a real sucking the life out of the dollar yen market, because the volatility is very, very low. And one of the indicators I watch is the dollar yen 1 month at the money option volatility levels. As you can see from the chart, we're at extremely low levels. Usually we're running around sort of average between 6 and 7% on those, but we're right down near 5% and in danger of even dipping under there. Now, what that means is that the market is seeing very, very little volatility. It's seeing no reason for this currency to move in any volatile fashion, go anywhere, break any new ranges. So it is an indicator on how traders are playing this market. And as we've seen from the prices, we've been in a very tight range recently. Since the beginning of the year, really, we've been sort of between 110 and 112. And what that means is two things. It's very tough to see a big break of range. We've got a wider range at the 108, 112 level, but we're really sitting in between that. And so seeing anything above the 112 area up towards the higher 115 area is looking a tough ask. Conversely, on the other side, it's looking very difficult to see a big move down under 110. So while we've got these low volatility ranges, what we have to do as traders is look towards how we trade that, because it's no good getting in a trade off a level and expecting to get 80, 90, 100 pips, because at the moment it's just not happening. So what I've been doing recently is just basically trading between the big figures. So I'm a happy seller around the 112 area, and last week I was a buyer into the 111 area, because it's usually when you get quiet markets, you tend to find that the big figures tend to hold a bit more strength than the numbers in between. So what we've got coming up this week is the FOMC, and already we're getting chatter this morning that the market's maybe leaning towards getting a dovish message from the FOMC. We know they're pretty much in neutral. They're still expecting one rate hike this year, but the market is looking for any signs that they're going to change that, and even down to the dreaded word of cutting interest rates. I think we're a long, long way from that. The US economy is ticking along nicely. We know the jobs market is strong. Yeah, we may see some fluctuations in the other underlying data in between the sectors, but otherwise, the US economy is pretty much one of the strongest ones running at the moment. So what I'm looking for is perhaps to take advantage of any excessive dovish expectations. And if we get a move down to sort of the 111 area, ideally down to the low 110s before the FOMC, that's an area that I'm potentially looking to go long dollar yen, just to ride out those expectations. And if the FOMC are just more or less neutral as they were before, then those expectations are going to unwind and we're going to see the price rise. Again, I'm not going to be looking for 300 pips on this. If we get back up into the 111s, near 112s, I'll be up there selling again. So really it's just taking advantage of how the markets are viewing the FOMC and basically trying to grab an opportunity off the back of that. Just one other thing to keep an eye on is US Treasury yields, particularly the 10 years, because we are seeing dollar yen following those yields. We're back below 2.6% today, and that's put a bit of a softness in the dollar. So keep an eye on those, and we'll wait and see what happens over the FOMC on Wednesday.